Welcome to this episode of Fridays with Fintelekt. My guest today is Christopher Calabia, Senior Advisor, Supervisory and Regulatory Policy at the Bill and Melinda Gates Foundation. Chris has had a stellar career, having worked earlier with organizations such as the Federal Reserve Bank of New York, the International Monetary Fund, and the Bank for International Settlements. He is widely acknowledged as being a visionary leader for strategic change, has created compelling roadmaps for innovation in complex environments, led the development of the post-financial crisis supervisory strategy at a global systemically important firm, and built consensus on the regulatory agenda across global supervisory agencies. Chris encourages openness to new technologies and service providers in emerging markets and developing countries. Chris, thank you so much for joining us today.
Shirish, I'm honored to be here. Thank you.
Chris, at the outset, can you give our listeners a quick overview of how the Bill and Melinda Gates Foundation is impacting financial inclusion globally and the role you play at the foundation?
Yes, thank you, Shirish. Well, at the Gates Foundation, we believe that every person deserves the chance to lead a healthy and productive life. And so we work to address inequities in all forms, whether that's in health, in education, and in economic empowerment, especially for women and girls. And there's a growing body of research that suggests that when people who live in poverty gain access to appropriate digital financial services tools, that they're actually better able to lift themselves out of poverty sustainably and to invest in a better and brighter future for their families. It becomes a lot easier for them to make payments, to receive their wages, and to share funds with friends and relatives who may need some assistance from them, or to borrow funds themselves from friends and relatives, and ultimately perhaps to build a credit record and to be able to receive credit so that they can invest in their family's futures. And so these services are quite important in promoting an anti-poverty initiative in many countries around the world. And we want to endorse the use of these low-cost digital financial services. And this model is a relatively new business model. So if you think about the development of things like e-money issuers or mobile money providers that were innovated first in Kenya or in the Philippines some 15 years ago or so, these models have really taken off in many countries in South Asia and especially in sub-Saharan Africa. And we'd like to see them continue to thrive. And so that is the work that we do at the Bill and Melinda Gates Foundation.
Fantastic. So, Chris, the Financial Action Task Force, the FATF, recently launched a new project to study and mitigate the unintended consequences resulting from the incorrect implementation of the FATF standards, including de-risking and financial exclusion. What are your thoughts on this project? Do you think it has come at the right time? Should it have been initiated earlier? And what are your expectations from it?
It's a great question. And I suppose an obvious question is, why am I here speaking on a podcast that focuses on financial crime and preventing money laundering? And I think part of the reason is that we recognize that these services that we think are so important to helping people lift themselves out of poverty represent relatively new business models. And we want to ensure that these business models continue to serve the poor and the broader public well from now into the far off future. And one of the things that we think is quite important is to ensure that they are appropriately regulated so that they are safe and sound in how they operate, but also so that they don't get abused, so that they don't get used by criminals to launder money or to finance terrorism. If that were to happen, we're concerned that, of course, policymakers, legislators, regulators might not endorse these types of business models and might license fewer or perhaps even withdraw licenses. And so that is a risk that we'd like to avoid. And so I think it's quite important that FATF has recognized the important role that these types of innovative service providers can play in terms of expanding access to financial services among people who are traditionally underrepresented in the formal financial system. And that includes the poor, the unbanked, or groups like women, especially in low and middle income countries. And so the fact that FATF recognizes that that these services are so important to poor people, I think is quite important. And they also recognize that sometimes the standards that we have to prevent money laundering and to prevent these types of abuses can have an impact on the poor that is unintended. So as an example, in many countries, it's not possible to open a financial services account or to buy a mobile phone or even a SIM card unless you can prove to someone who you are. And that's usually by having an identity documentation, whether that's a birth certificate or a driver's license or a passport or something like that. But in many low and middle income countries, very poor people may not have access to these records or may not know how to get them. And so it's difficult for them to pass the typical sort of know your customer rules, as they're commonly called, that commercial banks and even mobile network operators may require in order to buy a phone or a SIM card. And FATF recognizes that the rules that we apply in these circumstances should reflect the true risks of the transactions. And for poor people who are opening accounts for the first times, they're probably going to have very small value accounts, and they're probably only going to engage in very small transactions. And so in many cases, they probably present a lower risk of problems like money laundering or financing of terrorism. And so FATF, for some years now, has said that in these types of circumstances, when there are lower risks, regulators can adopt risk proportionate approaches to the AML standards, including things like customer due diligence requirements, which are sometimes commonly known as know your customer requirements. And so FATF for some years now has endorsed things like simplified due diligence and other simplifications and exemptions for countries that have financial inclusion objectives where the risks are appropriately low. And so I'm glad that FATF is now taking the additional step of reaching out more proactively to a wider set of stakeholders through this initiative to look at unintended consequences of global anti-money laundering standards. And so my expectation is that this will broaden the dialogue. It'll bring in more voices of people who have not traditionally been represented in these discussions on global standards about anti-money laundering. That could include representatives of the poor, representatives of women, consumer advocacy groups, as well as development organizations that focus on things like promoting poverty reduction and international development. So I'm very pleased and applaud FATF for taking this step. It takes courage to ask people to offer suggestions about where your rules may be having unintended consequences, and FATF has taken this important step.
Absolutely. So Chris, what are your views on the pace of financial inclusion achieved by developing countries over the last few years? What would you say, are some of the critical success factors for accelerating this pace?
It's a great question. And in answering this question, I should recognize that we're still in the midst of a global pandemic, and that while some countries seem to be coming out of it, I know that some countries are still deep in the difficult challenges that the pandemic has brought. And so that I hope your listeners in those countries who are still working hard to address these issues are taking appropriate health and safety measures and following the best advice of medical authorities and public authorities. And so I appreciate the work is ahead. That said, pre-pandemic, I think we can say that we were making good progress in terms of promoting better access to financial services for the poor. So the World Bank, for example, found that between 2014 and 2017, about 515 million new adults got accounts for the first time around the world. And this means that as of 2017 or so, about 69% of all adults over the age of 15 had access to a financial services account of some kind, whether that was a traditional commercial bank account or something like a non-bank provided mobile money or e-money account. And that's up from 62% in 2014 and 51% in 2011, which is when the World Bank first began to conduct its surveys on financial inclusion. That said, the progress has been uneven in different parts of the world, and the number and portion of people who are unbanked can be quite a bit larger, especially in some low and middle income countries. And I think in particular, the gender gap is something that is of concern to many of us in the development community. It's remained virtually unchanged since the World Bank first began surveying people in 2011. Today, or as of 2017 rather, about 65% of women worldwide have access to a financial services account compared to 72% of men. And so this is a 7 percentage point gap that hasn't closed. And again, in some low income countries, that gap can be dramatically larger. And women's access to financial services is of special concern to us because studies show across countless countries and cultures that when women have access to a financial services account that they control, they invest more in education and nutritional needs of their families. And that leads to better outcomes for both boys and girls. And so basically it's a win-win when women have access to financial services. And so working hard to address the barriers that especially women face is one of the things that we focus on in the foundation along with other partners. And we think about the challenges that women have gaining access to, for example, identity. in many low-income countries, 44% of women or more don't have the traditional identity documentation that might be required to open an account. And so that's one of the things that we focus on. So in many ways, this is not really a time for us to rest on our laurels. So as of 2017, 1.7 billion people were still unbanked, and that is something that we need to focus on. But in addition, the pandemic has really caused some dramatic increases in the number of people who live in poverty. The World Bank earlier this year estimated that maybe 120, 124 million people were pushed into extreme poverty in 2020 alone. And that means living on an average daily wage of less than $1.90 in 2011 US dollar terms. And that's of great concern, because up until that point, we had seen annual reductions in the number of people living in extreme poverty. And so we'll have to wait to see what the latest statistics suggest where financial inclusion stands. But I think that one thing we learned from the pandemic is that these digital tools can be important in helping people through the hardships of the pandemic. So whether it's digital identity, making it possible for more poor people to enroll in digital accounts so that they can then receive digital payments from the government, such as cash transfers, to help them weather the economic hardships of the pandemic and the work furlough requirements in some cases, and so on. And so these digital tools, I think, will be important as we continue to think about the recovery and rebuilding the economies after the pandemic.
Right. So, Chris, your note on whether stable coins and other digital currencies might drive greater financial inclusion was recently rated as amongst the top 10 publications of 2020 by FinTech Gateway. Can you give us a quick overview of the paper, as well as what were the reactions to this paper from the regulators?
Thank you very much for citing that. Yes, I had been reading a lot about cryptocurrencies and digital currencies because there'd been so much interest over the past 2 or 3 years. And one thing that I discovered is that there wasn't a lot written about the true impact on financial inclusion and practical questions. So for example, many innovators and some international organizations were heralding digital currencies as potentially a tool for promoting inclusion of those 1.7 billion people that I mentioned who are currently unbanked. Yet there isn't, or as of last year, there wasn't a lot of literature on exactly how these digital currencies would work for people who are currently unbanked or underbanked. And how does these digital currencies compare to existing technologies like mobile money or e-money or services offered, for example, by the Payment Services Bank in India? And so in talking with innovators and technologists and others in the development field, as well as regulators, I realized that not a lot had been written on the subject. So I wrote that note initially as a call to action among researchers and providers and others to think a little bit more practically about how digital currencies might serve as a promoter of inclusion, especially in low and middle income countries. But I think it's also important to think about low and middle income, low income households, even in higher income economies. Will these digital currencies help people in virtually any country who may be underbanked or underserved at the present day? And so what I did in the paper is sought to identify roughly 5 sets of questions that I thought at the time were unanswered about different types of digital currencies, and especially stable coins, as you said. And so if your listeners aren't familiar with stable coins, I think many people may have heard about something like Bitcoin, which is a digital asset that doesn't really have anything sort of backing it up. And so if you are a holder of Bitcoin or other types of those types of currencies, digital currencies, or digital assets, I guess we should say, the value may fluctuate quite a bit. And it's been a wild ride for some of the Bitcoin holders in recent years in particular. Stablecoins are meant to limit some of the fluctuations in the value of those digital assets by backing them up with perhaps hard currencies or other assets that investors may believe will not fluctuate so much in value. And there was a lot of interest, say 2 years ago, in stablecoins as being a potential driver of inclusion. So I asked some practical questions about how fast could stablecoins work, if their processing speeds, and would they compare well to existing technologies like Bcash in Bangladesh or M-Pesa in Kenya. I asked about whether poor people in many low and middle income countries own the right types of technology, the right types of phones to be able to make use of these types of digital currencies. I asked what the costs might be for using these types of assets, especially in an international context, if you're a worker trying to send remittances home. I asked whether women and men might benefit equally from these types of technologies, and then a couple of questions about how they might be regulated, especially compared to these new types of business models like the mobile money and e-money offered by non-banks. In terms of the reactions to the note, I heard from regulators, from global standard setting bodies, from innovators, and a number of researchers on this subject. And the good news for me, at least, is that everyone agreed that these were important questions to be asking and that it was worth exploring these in greater detail. And so I've been pleased to see that in the interim, there have been more papers published and about some of these questions and related questions about whether digital assets and digital currencies will help to promote inclusion. I think some of them still continue to remain unanswered. And I think now as well, there's been a shift in interest from privately issued stablecoins to central bank or government issued stablecoins, something called like central bank digital currency. And so a number of international organizations are are working hard on these issues. The Bank for International Settlements suggests that almost 80% of central banks around the world are thinking about central bank digital currencies currently. And so there's a lot of dialogue about this. And at the Gates Foundation, we're going to be launching some work this year to think a little bit more about whether central bank issued digital currencies might help to promote inclusion.
Right. So on that note, Chris, you just spoke about central bank digital currencies. Regulatory evolution in several countries is struggling to keep pace with innovation. In the areas that we spoke about, digital payments and cryptocurrencies. So, what impact is this likely to have going forward on financial inclusion?
It's a great question. And if you read the headlines and listen to webinars and conferences these days, I think a common theme you'll hear is that the pace of change seems to be accelerating, especially in technology. And there is a sense among some that maybe regulators need to do more to keep up with the evolution in technology and so on. And speaking as a former regulator, I will say that first we should recognize that regulations evolve when legislation changes. And in many countries, national legislatures will change their laws regarding financial services and the offering of financial services only after business practices start to evolve or after new technologies are introduced or when there's been a problem in some kind. So to some degree, historically at least, legislation has tended to react to challenges, and then regulators have license to develop new enabling regulations to address those challenges or new business practices and new technologies. So to some degree, perhaps we shouldn't be surprised that regulation may lag some of the innovations in the business sector. And that's why I think dialogue is so important between regulators and innovators and financial service providers, and also importantly, consumer advocates, to think about new business models and how they can serve the broader population better, or new technologies and how it could help to promote greater financial inclusion, especially some of the groups that we mentioned who are typically left out of the formal financial system. And that's why I think it's important that there are now new venues where people can come to talk about these different subjects. In the past, central banks and regulators sometimes didn't have an obvious place where they could talk to a firm that wasn't yet regulated or that didn't yet have a license to offer financial services. Now, some central banks have opened office hours, or some regulators have opened innovation offices to help provide places where innovators can come and discuss ideas that they have and hear some of the concerns or questions that regulators might have about them. Some authorities, like the Financial Conduct Authority in London, have begun to hold tech sprints, as they call them in London, or hackathons. The Central Bank of Kenya has launched similar types of events as well, where they bring together regulators, providers, technologists, and consumer advocates to talk about common challenges or new opportunities and figure out how best to make use of technology innovation or policy innovation even to ensure that the financial system can serve the needs of all, including the poor. And the Bank for International Settlements is opening the innovation hubs. Currently, they've opened some in Switzerland, in Singapore, in Hong Kong, London, with more to come. And this is an important venue for central banks and regulators to come and talk about innovative topics and think about how technology can help central banks and regulators to do their jobs better. And finally, I'd say that people like you, Shirish, have created platforms for dialogue. And so I'd like to thank you and the team at Fintelekt for creating this series of webinars and these types of fireside chats where you can bring together regulators and innovators and consumer advocates to talk about issues related to promoting better technology, promoting global financial integrity. So you have a part to play too in this dialogue, and I really appreciate that you have created this venue for people to talk.
Thanks so much, Chris, for those kind words, and that's indeed very encouraging. Thank you so much for joining us today. It was really a pleasure and privilege speaking with you. And I wish you all the best in your endeavors at the foundation.
Thank you very much, Shirish.